Welcome back to the podcast. I'm Dani Hallsell, and today we're doing something I love, talking about what the actual 2025 looked like, what happened on the local real estate market, and what we expect heading into 2026. If you're a buyer, a seller, or just someone who'd like to understand the market that they live in, this episode is just for you. I'm joined by Susan Heren, mortgage expert, trusted lender here in Washtenaw County, and someone I work closely with on behalf of all my buyers. Susan brings financial lens to the complicated picture of real estate, and we're happy to have you here again, Susan.
Thanks, Dani. I love doing these year-in review conversations. The headlights don't always tell us the real story, so the local details really matter.
Let's start with the local real estate from 2025. What did you see in the market?
Well, Washtenaw County prices didn't fall. They actually held up, which is different from what people were hearing on the national news. Median sale prices hovered just over the low $400,000 range. And while we didn't see the frenzy of peak bidding wars, well-priced houses absolutely still sold.
Yeah, I would agree with that, especially in Washtenaw County. You're hearing down in Texas and down in Florida that people are leaving just because the prices are so high. Their insurance is so high, and they're starting to migrate up north, which I think is helping keep our market kind of steady at a 4% growth instead of a ridiculous 10% for the last 4 years.
Absolutely.
Yeah.
Well, and I think too, Washtenaw County offers a lot of professionalism with the university, the different hospitals that are here, the tech that are here.
Mhm.
So I just think that keeps our market strong and steady.
Yeah, especially in the Ann Arbor market. I guess one question I would have, and I don't work as much in the downtown Ann Arbor area as some of the agents do. Are you still seeing families that are purchasing condos or homes for their kids while they're in school and then maybe keeping them or reselling them after they've graduated?
Oh, for kids that are in school at Michigan. Yeah, we do. We see a lot of that where, like if you're going to pay room and board and tuition and whatever, you hop into the real estate market, buy that investment property, get a little appreciation over the 4 or hopefully only 4, but maybe 5 years that those kids
Right.
are here.
Right.
And then you either keep it and you rent it to other people or you sell it and move on when your kids do.
Right. My aunt and uncle live down in Florida, and all 3 of their kids went to Florida State up in Tallahassee. And so they purchased a condo, and all the girls went through there. So they've had that for a good 10 years, and they even kept it a couple of years after they graduated so they could go back to the football games and whatnot. So it was a very good investment
Seeing
for
some
them.
good appreciation on that, I'm sure. Yeah.
And when they decided to get rid of that, they bought a lake house. So good investment. Now all the kids and the grandkids come to that.
Yeah. Yeah. Well, is back to, what we saw kind of in Washtenaw County on the mortgage side of things, the balance that we saw was actually healthy for the buyers. We saw fewer people making panic decisions, more thoughtful buyers, people getting, they were qualifying more carefully. They were planning their payments. They weren't stretching the way they felt the pressure of, 2 or 3 or 4 years ago.
And don't you think that leads to more confidence in buying, less buyer remorse?
100%. Yeah.
Because in the past, we were finding people were waiving inspections. They were trying to qualify taking money out of their 401k and then hoping they could refinance later. And then as we all watched, the interest rates climbed up. And, I'm very pleasantly surprised that I have not seen people going underwater from some of the mistakes they made.
Yeah.
So
there were a lot of people, we got phone calls the year later, hey, we waived the inspection on this property and wow, there's a lot more here than we thought that there was going to be. So buyer remorse, 6 months or a year in.
And they had to empty their bank account in order to buy the house. Yeah, that's a tough one.
Yeah.
So
poor mom and daddy emptied it for the buyers.
Right. So let's talk a little bit about mortgage and finance trends. What are you seeing? What were the biggest trends in 2025? Let's start with that.
Well, 2 big things. The first, buyers focused really more on monthly payment than the interest rate headlines that you heard. This is a really big shift. Payment affordability has really been the topic of conversation. We saw more creative tools like temporary buy downs, seller credits, and structured offers. Realtors working with their lender to create a structured offer that was beneficial for the buyer and also kept the seller in the game that they wanted to be in. So just helping buyers stay competitive without overpaying.
Did you find sellers reluctant to negotiate on stuff because of the past trends? I mean,
Yeah, I mean, I think it sort of depends, right? It's we saw, n- and a couple of years ago, it was like you just throw some price on a house and it
mhm,
was going to be sold. You didn't have to clean it, you didn't have to cut the grass, you didn't have to do anything. And
right,
somebody was coming in with an offer 10% over your list price. This year, it took a little bit more. I think of the realtors to sort of rein some of the sellers in and explain to them that uh, cleaning your house, for instance, or staging it was such an important piece of this, and pricing it right out of the gate instead of putting some inflated price on it to let it sit on the market,
mhm,
where ultimately you end up getting less for it. The temporary buy down and some of the creative financing tools, I've had a lot of conversations with sellers explaining that, explain it to the realtors, and then oftentimes they're like, "Can you just talk to my client so that
right,
they are going to ask questions that I may not know the answer to?" And I'm
absolutely,
always happy to hop on a Zoom call or a phone call with a seller to help them understand that $10,000 in a temporary buy down or even a permanent buy down is significantly different than for the buyer and what they're paying out monthly than a $10,000 price reduction. For the seller, it's the same amount of money. They're going to net the same amount. One way really helps the buyer significantly, and the other one not so much.
right. And here's a thought. And I haven't had to do this, but it would be a good idea. If you were helping somebody to structure that loan and they're requesting the buy down, would it be feasible for you to speak to the listing agent on behalf of
Oh,
the
always.
buyer and explain it to them that
Absolutely.
way so that they could explain it to their seller?
Yeah.
I think most
You,
people would be open to that.
yeah. And I reach out to the listing agent on every time I have a buyer that writes an offer just as part of my regular process. And if there's something in there, whether it's just a seller concession or what, if there's something in there that I feel like the listing agent and the seller really need to understand where this is coming from and why it's in here
Hmm.
and why it's so important and how that affects or doesn't affect the seller, I think that's a really big piece of my job is
Right,
helping that listing agent because ultimately we have to sell it to the listing agent so they can sell it to the client, right?
right,
So
right.
that client's going to come with questions that maybe the listing agent never thought of.
Well, and with things changing, it's so fluid. I always joke, I'm going to start a blog, and what I learned today, there's always something new that
There's
you're going
always
to
something. Yeah.
learn. All right. So 2026, do you just see a continuation? Do you see any chance things are going to be changing with interest rates? And I know I'm going to mess this up, but I know the government was looking at doing something with the bond market that had to do with mortgage rates.
Yeah, quantitative easing.
Thank you.
So, yeah. So they have been buying these mortgage-backed securities for a very long time, and they've been trying to. They did buy them, and then now they're trying to get rid of them all. And so, when they stop with the balance sheet runoff, that's going to allow for a sort of a more balanced supply and demand of these mortgage-backed securities, where and previously they've had the gates are flooded with what's there. So supply and demand tells each one is not worth quite what they maybe should be.
Mhm.
So if they stop doing that, that's definitely going to help. Um, I think going in, no one actually knows, but I would venture to say that we're probably going to see rates in the mid fives to low sixes as we continue through 2026. I think that's probably a fourth quarter by the time we get down there. I am very hopeful and have a really positive outlook for the market of 2026. I think it's going to be a more active market. I think we're through the election and we're through the first year. Rates are where they are, but they are not in a bad spot.
Right.
When you look at the history of rates, they're not 2%, but buckle up your seatbelt if they get back to 2%, because probably your 401k doesn't look like you wanted
Correct.
it to, right? So I think people have gotten over that, hey, we have a new president, and the whole every election year, it doesn't matter. This is definitely not a political statement at all, but every election year, people kind of sit on the sidelines just to kind of let's sit back and see what's going to
I
happen.
would agree. And then with the close down, there's just a lot happened this past year, and I agree. And I think that people got worn out from the last 4 years. And then when you do add the election year and then you add the shutdown, I think it's going to be after Christmas. And then I think you'll start to see people moving again.
I do. I think there's a lot of pent up demand. There's a lot of people that are living in the house that's not right for them.
Mhm.
They're sitting on maybe a 2 or 3% interest rate, and they're hesitant to make that next move. But ultimately, they know the house is not right for them. We have a huge uh, millennial generation, or even Gen Y,
Yeah.
uh, that are coming of age to buy property. And I think those kids are looking at, hey, like, let's stop paying rent. There's enough
Right.
people out there saying, like, hey, rent maybe isn't the best solution. So let's get in and buy a house. So I think we're going to see a lot of people making that move for 2026. I see just a gradual improvement on rates as the year goes by. I don't see any huge dramatic rate drop as we move along, but just more stability and a stable market, which after the COVID years of 2020 to 2020, whatever, three, where you couldn't keep up,
Mhm.
stable isn't necessarily a bad thing.
I'm
It's just
Stability
stable,
is my favorite word this year.
right? Yeah.
Yes, it would be very, very nice. And I'm wondering if Gen Y, because the millennials really seem to put off buying a house for a long time. And it was also a segment that they were used to having their parents have a house that had all new granite countertops and new appliances. And they were kind of holding off for that.
Yeah. I don't
And
think HGTV has helped us any.
yeah,
No. That's what they see, right? And then they,
yeah,
they walk in, and you're supposed to look at three houses. All of them are redone and beautiful, all well within your price range, and you're supposed to pick one of the three.
correct.
But we know in reality
Right.
that doesn't necessarily happen. So are these kids ready to like roll their sleeves up and
That's
paint?
what I'm wondering, Gen Y, if they're going to take advantage, kind of going back to, well, I could use my generation or a little bit younger, where you're moving into your first home that's going to need some work. You live there for 3 or 4 years, and then you sell it with some equity and then move yourself up.
Right.
And, I'm hoping, and that's the one thing I'm teaching my daughter, is that, as soon as we can get you into house, when you figure out where you're going to be, it's best to do that and start making some equity.
Yeah.
So,
And I think, for those, for everybody, but especially for the younger first time home buyers, whether they're the older millennial or whether they're the Gen Y or whatever, I think preparation is probably the key word here.
mhm.
Um, Buyers that plan ahead, understand what their budget is, where their comfort zone is, and find a professional realtor, lender that you can work with. Find somebody that will do a really good job, that connects with you, that is ready to be patient with you. And I think when you are prepared and you understand the market and where it's going, um, those are the buyers that are going to win in this market. And I think for the seller, the same thing, preparation, clean your house, stage your house, and listen to your realtor,
Yeah.
right, on pricing, because that is, that has been, for as long as I've been around and in the real estate business, that has been the one thing that has held true from day one, is that if you overprice going in, it's going to sit longer and it will ultimately sell for less.
Correct.
So So having an agent that really works on your behalf, really pulls the comps, looks at the data, that's the information that a seller needs. But the seller also needs the information from their agent about preparing their home and getting it ready to sell, because throwing a sign in the yard may not be the answer this year.
Not anymore.
Yeah.
It's funny because we did do a agent mastermind a couple of weeks ago, and that was the topic of conversation. Martin Bauma was talking about they've had several houses that needed some work, sat on the market for 3 months. Finally convinced the one seller to take it off, do some minor repairs, a little bit of updating, put it back on the market, sold in a month for over asking price.
Yeah.
And they relisted it for the same price they originally had it for. So I actually have a blog post for the beginning of January just on that, how much it would cost, because if you tell a buyer, well, there's hardwood floor under that carpet, they're going to say, then why didn't you pull the carpet up?
Right.
Or, this has potential for the kitchen. Well, that's really a lot of work for me.
Right.
So it may need $20,000 worth of work. They see 40,000.
Yeah.
So,
and it's hard to see sometimes,
Mhm.
right? Like it's really hard, I think, for some people to kind of have the vision of what this could be,
right.
where they think it is a 40,000 job. It's actually a $20,000 job, and the seller is ultimately going to end up getting more money if they go in and do the work. Not always, not in every situation, but oftentimes, especially when it's the paint or clean or stage or get the stuff out of your closets. One suggestion that I would have for anybody that's thinking about selling is take a Sunday afternoon and go to the open houses of the of your competition. Go see what everybody else is looking at.
Yeah.
Because what you're seeing is what the buyer is looking at. And I think this year we're going to see buyers comparing a little more than they had before, a little more carefully.
That's a really, really excellent piece of advice. And the other one that I would have that I don't think people take into consideration is what you brought up earlier, is that, buying and selling real estate is a long game. It's not something you do quickly. So the sooner you go and you talk to a lender, you talk to a real estate agent, if they're worth their salt, they're not going to be rushing you through. They're going to be there with you for up to a year when you're ready.
Yeah.
And there's not a perfect house, but you want to be prepared for the one that feels good to you.
Yeah, absolutely. And I think one of the things that gets missed so often is your seller. Have your seller talk to a lender before you ever list their house. The seller needs, this isn't two separate transactions. This is one family move. Whatever that family looks like, right? And so the seller can't list their home, accept an offer, whether it's above or below their asking price, without knowing what their budget is for the next thing and what that's going to cost them. And is it feasible and is it realistic? And, we do a soft pull in the beginning. So it's not like we're hitting their credit a year in advance. This is just the time to explore, right? We're just looking for what can we do? And sometimes people have a little blip in their credit, or there's something on there maybe they're not aware of. This is the time to go find that, so that when the offer comes in, maybe it's at list price, but maybe it's a hair under, they know, okay, I know I have to pay commission. I know I have to pay transfer tax. So based on all of this information, I'm going to get this much, or I'm going to get this much money back, which means I'm going to put this much money down on this house and my payment is going to be X. Let's know that. And let's know that you can do that before you ever put a sign in the yard.
Information is gold.
Information is gold. And preparation will be key, I think, for this year. And I mean, this year or not this year, I think preparation in a home buying situation is your best friend.
I think that's all great. So if you're thinking about buying or selling in 2026, my advice is simple. Don't rely on headlines, rely on your local data and your trusted team.
And from the mortgage side, don't wait for the perfect rate. It may or may not ever come. So build a plan around your goals and your payment, your comfort level, and your timeline. This is how you win in the market.
Awesome. I really appreciate you talking to me again. It's always a pleasure. And hopefully once a month we can do an update in 2026 that we can share with everybody and they can keep track of what's happening with the market. I will put all of your contact information in the show notes. So if people want to call and get the process started, they'll be able to reach out to you during that.
Perfect. Thank
Anything
you.
in closing?
That's all I have. I love these conversations. I love to see where we've been and hopefully where we're going to go. And it'll be fun to look back at the end of next year to see if we were right or not.
I'm feeling good. I really am about 2026. It's going to be refreshing to get out of 2025 and move forward. So
I think it's going to be a great year. Like,
Yeah.
again, lots of pent up demand. There's a lot of people out there that need to buy a house. And I think they will. I think there'll be a lot of people getting off the fence and moving forward. So I'm
Excellent.
super pumped and excited for 2026. And
Awesome.
I appreciate you having me. Thanks.
So, folks, thanks for joining us today. If you found this useful, please follow us on our podcast, and we look forward to talk to you in the future. Take care.
Bye.
Oh.